Welcome to Monday Morning Metrics. My name is Rebecca Bernick. I am the founder and big head of Office Heads. We're a financial management company located in Evanston, Illinois, and we provide bookkeeping, accounting, analysis, and financial business coaching to small businesses. So every Monday morning, right around 10:30 Central, I jump on Facebook Live for Monday Morning Metrics, and here we talk about all things financial plus small business operations. We like to grow small businesses using the financial reports to make strategic decisions. So it's really super important to know your numbers. And so that's why we're coming here today to always talk about small business and how that ties into finance and numbers, because I want small business owners to eliminate their fear of finance so they can just go out and spend more of their time doing what they love to do. So today, by the way, please be sure to comment below and I'll answer your questions as I move forward, and I can always answer them after the case if you watch this as a replay after we've gone live. So today, I was at a networking event last Thursday, and I was talking to somebody who I said, hey, do you have a topic that you would want me to cover on Monday Morning Metrics? And she said, how do you read a profit and loss statement, like an income statement? Like, how do you actually use it for a tool? So that's what we're discussing today. How do you read your income statement? So I'll give you a couple of tips and some hints, and we'll go from there. First of all, I don't know why they call it an income statement, because it actually has income on it and it also has expenses. So it's also known as a profit and loss statement. And that's the way I usually refer to it, as a profit and loss, or a P&L, because it does basically some simple math. But let's first talk about a P&L in just simple language, because there are a number of sections and it really is basic math. So the first thing that a P&L has on it is your income or your revenue. So anything that is just the money coming in, right? That's your money coming in. The second section of an income statement is your cost of goods or cost of service. You might hear it also called COGS, which is an acronym. And basically those are the expenses that you incur that are directly associated with the income that you bring in. So what does that mean? So let's say, and I'll give a couple examples. Let's say you sell widgets. And with those widgets, in order to make those widgets, you need to purchase nails and glue and paper for those fancy widgets. If you stop selling those widgets, you stop buying the paper and the glue and the nails. So it's directly associated with it. If you are a service business, what's directly associated with delivering your consulting services is your direct labor or your contractors that you pay to deliver those services. So said another way, if the revenue stopped coming in, the cost of goods or the cost of service would go away. So if you decided to take a month off and you weren't going to do your services, you shouldn't be spending money in that area. And that's really important, because those two sections together, so you have your revenue subtracted by your direct expenses, that is your gross profit, or said in just normal layman's terms, what's left over is the money that you get to choose to spend to operate your business. I love to say it that way because it really is a choice. And I like business owners to realize more and more that they have choices as to where their money goes, because that is how you operate a financially healthy company. So now you have all of the money come in, you have the money that are directly associated. So let me pause for a second, because this is how you look at your report. So let me back up for a sec. You really should customize your chart of accounts, because the basis for all of your financial reports is your chart of accounts. And if it is not customized to how you operate, then it really is just this vague report. And then I can understand why it's sort of confusing to say, well, how am I going to use this report when it just says income and cost of goods? So I'll use Office Heads as an example. So our income is our onboarding projects, our special projects, and our ongoing financial management, plus some digital tool subscriptions. Okay, it doesn't just say income; it breaks it out into the areas where I am in my revenue streams, right? So if I've got multiple revenue streams, you might want to have multiple income lines. So you have to customize your chart of accounts to say that. Your cost of goods should mimic those, because at any given time you should be able to say, and I'll use the same example, if I'm selling digital tools, which is a monthly subscription, and my cost of goods, I should have the expense associated with that. So if we wrap up QuickBooks Online to our customers, I have to pay Intuit for that QuickBooks Online. So I can easily tell this is what I got in, this is what I was charged. Did anything fall through the cracks? That's how you use it when it comes to operating and delivering your services or selling your products. Regularly, quarterly, annually, just regularly, whatever your regular schedule is, you should be reviewing your vendors and making sure that you are getting the most efficient products, most efficient services, the lowest cost for your to be able to deliver, to make sure that you are operating and delivering efficiently. Again, so it goes down to your gross profit. So the income coming in and the money that you have to spend in order to bring that income in leaves you the amount of money to operate your business. And those are the choices. Now, I'm going to talk again because the next section is your operating expenses. Now, the chart, I believe in this very strongly, that you should customize your chart of accounts, because the default chart of accounts that comes out of QuickBooks, it's okay for tax prep. It's not so good for operating a business. So one of the first things that we do with all of our clients is we customize that chart of accounts according to regular operating departments. So we take anything that has to do with payroll and comp and benefits and kind of bucket them into a section. So when you take a look at your profit and loss statement, you can say, wow, how much am I spending on people? The next section is operations. So that's rent and leases and cars and various different things to operate your business. Again, so you can take a look and say, well, how much am I spending? What percentage of my income is going toward operations? The next section is business development and so BD and marketing. So how much are you spending to get the word out so people know that you're there so you can increase your revenue? That's an important one, because a lot of times people will try to figure out what their ROI is with their marketing. This is how you do that. If you bucket that all together, that includes website, advertising, Google advertising, PR, going to conferences. All of that stuff is your sales and marketing, and you want to be able to track what you're spending on your sales and marketing. And the last section that when we customize the chart of accounts is general and administrative. That's office supplies, insurance, bank fees, things like that, that just are kind of the small little expenses that roll along. So here's the next tip. So now that you've okay, let's say that you've customized your chart of accounts and you pull up your profit and loss statement already by rearranging your chart of accounts, it's going to look a lot more readable. You're going to go, oh, now I get it. It's just going to fall into place a little bit, but I'll give you a couple of tips. That profit and loss, you can slice and dice in many different ways. So one thing, and I'm going to lean over here every once in a while to look at my QuickBooks Online file. Look at it on a monthly basis. So there are different ways to be able to structure and generate that report. So you click on profit and loss. You're going to take a look at it. What I'd like you to start doing is look at it for the entire year, but look at it by month. And that way you can see trends. So it's important you say, hey, I want to make 500K this year, but how much do you make per month? Is it divvied up by 12 months and it's even? Is there a trend, and maybe summers are better and winters are slow? If you do it by month, it'll give you more information month by month on how things are going. Here's another tip. It is called click on the compare to another period, and there's a check mark on there that says that you can do have all your line items as a percentage of revenue. This is when you start picking your KPIs, and your KPIs are key performance indicators, right? So when your KPI should answer the questions that you're asking about your business. So service business, you say, how much am I spending on my labor? I want to know, it should be pretty regular that you're spending the same percentage from your labor as your revenue. So if your revenue goes up, that percentage should remain the same. If it goes up and down, then you start wondering, maybe I should investigate further. But it doesn't have to just be labor. You can say, hey, I think I'm spending too much letting my salespeople take my employees out for lunch. How much am I spending on that? And once you get to know your history, you can plan for your future, because you could say, you know what, I want to cap that at 5%, and 5% of revenue is X. So then I can give my employees a certain amount of budget in order to spend things. So this is, how to read a profit and loss and really to use it to your benefit is a really big topic. but I hit upon the important things. So rearrange your chart of accounts I forgot to go all the way down. So you have your income, and then you have your cost of goods, and then you have your gross profit, which is the money that you get to choose to spend to operate your business. You've customized your chart of accounts so you know each of the areas of operation that you're spending your money on. And lastly, are you making a profit or are you operating at a loss? That is super important. And of course, we want to have a profit, and that percentage is also important too. Are you steadily at 5%? Does it go up and down? Why does it go up and down? Was it 5% for 3 months and now it's 6 and 7? That means you're operating a good, profitable, healthy company because your profit is going up. Now, what is profit in real words? So before, with gross profit is the choice of what you get to spend it on in terms of operating your business. The profit is the choice of how you take that profit and celebrate with it. Now, we can have a whole other section on what to do with profit. I will just be really quick to say, I think there are 4 things that you do with your profit. 1, you distribute to your shareholders to celebrate because it isn't easy to run a healthy company. 2, any debt. If you have a debt plan, take some of that money, push it towards your debt. 3, savings. Do you have enough money in your savings account to buffer anything? We like your minimum bank balance to be half of what your operating expenses are per month. So at least you have always some money in there to cover expenses. And your goal for your savings account is going to be 3 times operating expenses. So if you make about if your operating expenses are about $50,000 every month, we'd always like to see about 25K in the bank. And then it would be really great to try to get 150 in the bank. That would be a healthy company. Lastly, you are reinvesting into your company. So if you have extra profit, you say, hey, I'm going to buy some new computers. I'm going to hire somebody and put something more into my company. So that's what you do with profit. Those are various different ways to read your profit and loss statement. So thank you so much for, I think I rambled on a little bit. I get kind of excited about a profit and loss statement. Thank you very much for joining us. This is how you read a profit and loss statement. Please add comments below. If there's any topic that you want me to cover in a future Monday Morning Metrics, mention it. I'll put it on the schedule and we'll talk about it. In the meantime, thank you very much for joining me. Have a great and wonderful, profitable day.